The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time. 877-927-6648 is the number to call. Hey, let's look at this. This is a really strong candle. I had for subscribers to my opening call, I'd mentioned today that yesterday there was a Chapman Wave trend gauge reading that suggested there should be a 9 to 11 point strong rally in the E-mini futures and the Dow futures, and that should help the price of the very oversold condition of the Dow. Look, we went to the left side lows. In fact, yesterday's low of, I forgot to type it on this chart, 25,000 to, was that 222? Yes, it was 25,222 right here. And that tested, let me just show you. Oh, actually, let me go here. Right, we go. So this is what I showed subscribers. This is, we didn't have these candles, these two green candles in the 120-minute chart. What I say is we've gone to a Chapman Wave 5. We've gone to a potential trough D. We're in a down channel. We hit the bottom of the down channel. There should be a rebound. Rebound could go towards the moving averages or even to the resistance line right here. And then we're going to see what happens after that. And that takes you to, depends when, but 25,710 is the resistance that we're looking at. Most importantly, what we were looking at in the 120-minute chart was, look, I spoke about this on the show. Look at the plethora of Chapman Wave automated support levels. You see these blue numbers right here, 25,307, 25,278. We went slightly below that yesterday. The MACD started to turn up, and the stochastic was down in the 20 at the time. I think it was at about 20 or 19, about 19. And I said, there's a good chance that we're going to have a little bit of a rebound. There's more than a little bit of a rebound. This is actually a very strong rebound, over a 50% rebound from the actual price high to the price low from the day before, from the closing price of Friday. Now that tells us that we've seen this picture before. We've seen big candles going up to the resistance. Remember, the Chapman Wave, within the context of a down channel, I can still have an inside track repellent zone. So we're getting close to that. I could draw it in now. I don't want to mess around with this particular chart. I wanted to show you the next one, which was the daily. And we went to where? We went right to 25,208 was the low on March the 11th. Also trough F5 in the Chapman Wave methodology. Now, what's really important is that we went to this leg D and then became trough D today at 25,277. So we filled all the gaps on the way up, and we've also gone to that left side low of importance back in March. Now what we're looking at is how does how does the Dow handle this particular candle right here? And that's the candle of Friday, where we went to a lower low and had a spectacular fake news related rally, and that rally took us all the way back up into above the closing price of Thursday's candle, of even Wednesday's candle. So now we're looking at the resistance levels, and all I can say is that 25,911 is the 9-period exponential moving average. I'm not sure whether we're going to get there in this move. There's enough news on both sides to say, hey, we got very oversold. Let me just show you the VIX index just to prove the point. Look at the VIX index. The VIX index went to a peak E at 23.38. And that was on, what's today? Today's Tuesday. That was on Thursday. So even with Friday's move and then turnaround, and even with yesterday's sharp decline, we didn't go to new recovery highs above 23.38. Very often we look at these candles and the wick, especially in the weekly chart, becomes really important, because we've seen how many times we reverse down and produces very thin shadow on the upside. Well, we don't know if we're going to do that yet. All right, there is enough evidence to say that the weekly chart of the VIX is trying to turn around, but the week has just barely begun. Let's see what happens. Most importantly, what we are looking at is at 17.84, it's still pretty high. And if the VIX starts to trade in the 16.30 or the 15.90 area by Thursday, that's really going to help the market a lot. All right, so let's get back to our little nitty-gritties. Just for those of you who asked, here's the E-mini. I had a down arrow in the E-mini at a peak D in the Chapman wave. It was kind of flat. It actually went a little higher. I didn't realize that. It went just a tad higher, 25 cents, I think. And that's an E, and that gets a little kind of inverted V-shaped pattern to say, hey, just a period of rest right now. Let's look at the RTY M19. That's the Russell 2000. Where did I type that? I typed that in the wrong place. Let's type it over here. I'll just hit this. Bang. There it is. Okay. So we're looking at this one, and this went a little higher as well. So this is going to be, this is interesting. Then we do a G. I'm going to call it a G/C for now. All right, so I'll give you parameters. At any point, if the E-mini, let's just go back to the E-mini. Most of you are trading E-mini if you're trading at all in the futures. If the E-mini pushes above 28.55, that is extraordinary action on the day. That's going to be very positive. If it suddenly slides and holds for 30 minutes below 28.40, let's make it 28.38. That's going to be a negative and say, uh-oh, rally's done for now. We're going to pull back and maybe have another attempt tomorrow, but a chunk of the rally is maybe over. I don't think that's the case right now. I see many stocks that were oversold in indexes. Okay, let's get back to our nitty-gritties here. The S&P, SPX.X, there we go, S&P 500 index at up 35 has a MACD that suggests it's going to take a huge move to the upside, probably taking out the candle high of Friday, 28.91.31, to reverse everything and say that weekly is back and it's going to make a leg D quicker than I thought, because I thought that we'd have more time, and that's the case. But if there's a stalling out of the 50-period moving average around about 28.60 or lower, that's just going to suggest we're going to use time. I still think that a chunk of the price move might have been made, not the time. So we could have rallies and then real bad news, and then there'll be this one big sell-off and the VIX goes crazy again, and then we get that reversal for a V-shaped recovery, if that's going to happen again. Two things. One is in sell modes in most of the key indices, not yet the weeklies. The weekly, none of the weeklies at this particular point, and not even the middle of the week, have given a sell signal, let alone anything else. So keep that in mind. I just wanted to show you that the TLT is pulling back some at down 47 at 125.26. This is the Lehman 20-year Treasury bond fund. Gone to a leg D. Looks like it's going to be a peak D with a 125.93 top. Made a peak D on the 28th of March at 126.69. Plummets to 122.11 on the 17th. Rallies again to another D, but under the other one. I'll talk about that in a moment. Basil Chapman, Tyco Technicians Hour. Dow's at 311. Be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Everyone, we're back. We're looking at the XW. A question came in. What about it? Had a great close yesterday. Yes, it's just bumping the S&P Select Utility Spider Fund. Had a high of 59.07 back in late March. Pulled back to about the 56.5 level. Now it's trading at 58.46. It's holding really well. Look at the weekly chart. If this starts to trade about 59.50, that's just $1 higher. Not only does it start to make a leg D in the monthly chart, but that weekly chart will start to improve. Technically, it's good right now, but it has been pulling back, even though the MACD is holding well and the stochastic's at 83%. But that'll be important. And it'll be important because it says that every time you try to bump a resistance level and you fail and then come back and try again, it kind of weakens the resistance, and that means you've broken through. You've actually, it's a kind of a breakout. You go into a lower low, and then all of a sudden a higher high. That's going to be very important. And you can see the MACD is just making that M-shaped pattern that says breaking out above, and stochastic's making a higher low. Even when the price made a lower high, it's a positive divergence. So keep this channel in mind. Or let me see, 120-minute chart A. We're only in leg B in the 120-minute chart. Yes, XW is looking very good. Question, let me just do this again. Okay, there it is, that peak E in the 2-minute E-mini chart. Nice pullback from the high of 28.49. It was actually 2,850.50. Now it's trading at 2844.50, down 6 points from there. Let's see if the RTH did that peak that I typed in there with the down arrow. Yeah, there's peak G/C, and now it's gone from the high of 1545.30 to 1541.30. Good. Okay. So these techniques that you see all the time, these are what we use for my subscribers to my opening call. Next question I had was just a general question here. Do you think diamonds will ever go out of style, Basil? So what I'd say is, if you're talking about furs have a moral equivalency. So furs are out of style. I'm not sure if they will come back like they had back in the 1920s. I suspect that there's some point they will come back, but it'll be very selective. But there was a period where it was just a very fashionable thing to have a fur, especially a mink. Okay, that's different. Diamonds, now I come from South Africa. It's one of the major diamond mines, especially Kimberley, the big hole they called it, in the middle of South Africa, on the way from Johannesburg to Cape Town. You could drive by, kind of a halfway marker. Think of it as a doji candle, a halfway marker. Anyway, so diamonds, I would suggest to you that diamonds, there's a lot of competition now with the man-made diamonds, not now, for a very long time. I'm told that they're becoming much more sophisticated, number one. Number two is, I'm also told that they are actually becoming quite hard to distinguish between the man-made. Real specialists can tell, but a lot of the times it's very difficult. So my contention here is more that they used to, they remember the song, Diamond is a Girl's Best Friend or something like that. That whole thing might have gone out the window. That's just it. Now, because there's a morality aspect to fur, there's a socio-political angle to diamonds. I think if you're treating it as do diamonds now, with man-made diamonds, have they impacted the original diamonds negatively? I can still say, from what I understand, no, but they're getting close, even in quality. And the other thing is, I have no idea. I could look it up. Maybe you could look it up, the questioner, to see whether or not they have the same impact in terms of the mechanical use, because diamonds are used for mechanization, for a whole bunch of things. And let's see, yeah. And as a result, I'm not sure if diamonds can be used, if they are, maybe even stronger these days, you know, man-made chemicals or man-made materials sometimes can produce much greater strength than under normal circumstances. So I just don't know the answer there. That might be the answer. Maybe it has more of a use in the whole industrial aspect. Oh, there Steve Rhodes says his great relative, Cecil Rhodes, founder of De Beers. Yeah, Steve, you know, I always chuckle about that. You remember when Clinton got the Rhodes Memorial and everybody was saying, yeah, the Rhodes, wow, fantastic. And everybody likes to bandy about the Rhodes Memorial. And then you go into the depth of it and you find out that, you know, to get those miners, it was ruthless and brutal. And they lost a lot of miners. And there's a moral aspect to that part of it. So that beautiful Rhodes Scholarship is kind of, as far as I'm concerned, for a long time has been kind of tainted. Hate to say it, but the fact that De Beers did what he did under those conditions, yeah, he had basically, it was almost like slave labor in South Africa, but he did produce an incredible amount of money and an amount of diamonds. And if that was the objective, then he certainly succeeded. So anyway, I'm just talking about the whole aspect of the scholarship, the Rhodes Memorial. But actually, there is that monument. I know, Steve, you've seen it there in Cape Town. Yeah, I mean, he's a figure. And like any, you know, you've got to look at history and put yourself into history's books and history's shorts or history's pants. You can't come along 100 or 200 or 300 and 400 years later and turn around and wave your finger like you are the god of morals. Things, even now, there are things going on that in 50 or 100 years' time, grandchildren and great-grandchildren say, why did they not, and wag their fingers? So it's the times that you have to put it into. So that's what I want to add there. Now, I'm not excusing anything. I'm just explaining something. So all right, let's get on with the business of the stock market. That was up 296. The question I had about Boeing. Yeah, Boeing is, I think, still weak. Oh, it's not bad today. Up 6 at 344. It's really taken a hit from, did I not type that in about 10 times? That was the high on the 1st of March of 446.01. Let me type that in once and for all. That was the first week of March. Has a little bit of a pullback, nothing like it had when it went from 394 down to the 286 area. This is a little different. This was after the terrible news of the second crash, and it has gone down from 446 down to yesterday's low, even today's low of 337. So 100 points, that's 26 or so percent. That is big. Oh, I got a question here. Kevin asks, let's see. Kevin in Sacramento would like you to cover WHR. Oh, WHR, isn't that Whirlpool? He can't stay on the phone, but he has a put which expires on Friday. Let's get to it right away. WHR, yes, okay, trading at 128.63. Didn't tell me what the put is, but if he had bought it a little while ago, he probably bought it at about 100. I'm just surmising, Kevin, that you're in the money right now, and it's what to do. Should you take your profits or should you hold on? I'll try to deal with that as soon as we get back. We're looking at WHR at 128.63, up 54 cents after making a low yesterday after its big high that was at 144. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back and we're looking at Whirlpool WHR trading at 128.50, up 42 cents. It's up 0.33. The general market's up much more than that. You know, with the China tariffs and all, I would not be surprised if Whirlpool's going to be hit in some way or the other. They might have to raise prices, and that's going to slow down sales, or they're going to have to have many more sales to generate a turnover. So because you're talking about this Friday, if you were talking about a week from Friday, I'd say, you know, just hold everything you've got. I think we're going to retest and probably take out yesterday's low. But this arch formation that could develop here, although the stochastic's really bad at 19%, showing no energy whatsoever, you could get a little bit of a bump. And I'm just going to draw this in as the potential. Now, I'm pretty sure, Kevin, that I would not be able to even say to you, it could bounce to 132 because I don't know where you got into the put position, but my suspicion is that you've actually been in for a little bit. Therefore, you did see a good profit on the downside. Let's just imagine that for a moment. I don't know where you got in, but it was before the big move down yesterday, and that you are looking at a nice profit. So here's what I'm going to say to you. The question always for me is to say, I got a question, not good enough. I want you to look at it and say, would I buy, would I sell, or would I just step aside because there's just no clue as to what it's going to do? There is a clue here. Based on the depth of the MACD, the moving average convergence divergence in the daily, the 120-minute chart, this chart on the right here, which went to a peak E and then plummeted down to a trough F yesterday, and now it's having a little bit of a bounce, has 129.55 as 9-period moving average resistance and 130.84. Here's what I'm going to suggest to you. If I was looking at this now and you asked me, would I buy, would I sell, if there was an option expiration, WHR, where do I think it'll be on Friday? My suspicion is that it's probably between now and Friday. There's a good chance it's going to test the low of today of 126.90. That's $1.50 from where we are right now. I don't know if it's going to take out yesterday's low. Would I buy or would I sell? I wouldn't be touching it right now. I'd probably be looking for a bounce because of the weekly chart with lower lows and lower highs to probably short it. But that's not the question you asked me. So my question to you is, if you have, do you have it with a decent profit? If so, then I'm going to say to you, do the simplest thing. Take some money off if you have enough. Let's just say you have 2. That's a big difference to if you had 10. If you had 10, I'd immediately say, hey, take off 5, and on the remaining 5 that you have, 2 of them at least, if it goes to a higher high today above 128.97, I take my money off there. I just leave the 2 because I would like to add to it on a bounce that starts to make a rollover H by Thursday at 11:30 to 1:30 on Thursday. So you're ready for Friday's turn down if that's the case. And the other thing is, if you have only just a couple and you're either in or out, I'm going to say to you, if you've had a good profit, if you only just got in, I'd say just don't play any games. If you have a profit, take it right now, because it would have to have a nice bounce and then start to fail around about 129.80 to 130.10 and then just start rolling over. That's where I'd be having a look at it for maybe a Friday pullback. But if you only have a couple, I'd say take your profits right now and then look to reshort, keeping the profit that you made right now as the cushion that you have. In other words, the whole package right now should not take a loss if you've been making money on this. I think I've answered it the way I would want to be thinking through the whole situation. If I was in that position right now, I'm not, so I have to look at it kind of through your eyes, and you weren't on the phone. So I hope that's good. Okay. So if there's another question, we've still got time to either today or tomorrow, just send it across and I'll try to deal with it. But that's my thinking, that the 120-minute chart should have a bounce. This bounce is kind of pathetic after the oversold condition that it reached, telling me that's in the 120-minute chart, telling me that the degree of weakness that I'm looking at in the weekly chart, in the daily chart, suggests that there should be lower lows and lower highs still to come. And that kind of is confirmed as the MACD in the weekly chart with 3.5 days to go has just crossed negative, but the week is young. Okay. Next question I had is, would I look at the XAL? XAL is, yeah, I had trouble with this one. I think I'm going to call this a peak C1, C2 in the Chapman wave. That's what I thought of when I done this the other day. I didn't actually get a chance to type it. I remember now that we were very busy in the day that I was looking at it, but it did make a peak C1, C2. I like a double top in the Chapman wave daily chart, pulling back, this is suggesting to me that I must look at the IYT, because if the IYT, the overall transportation index, which has airlines, rails, and truckers in it, if that is not doing too well, hey, that's got a nice bounce, but it went under the 200-period moving average. Now it's over the 200-period moving average. This weekly chart is suggesting to me, let me just draw this as a channel right now. Click, click, and there we go, make this pink. So we went just under it yesterday. Now we're above it. Okay, the IYT is suggesting this kind of complements my overall thinking, is that in price we might have made a chunk of the move to the downside from 200 to the low yesterday in the 184s, and that as a result, you're looking at some kind of a bounce, and then there's going to be yet another arch formation, and the big test is going to be next time, how does it treat 184? Is it support, or does it get taken out? Yeah, that's going to impact the weekly chart. And the MACD is still very strong in the weekly chart. Stochastic's now fading. It's at 75%. All right. Next question I had is XLB. XLB dollar. XLB. No, it's just XLB. This is a Select Materials Spider Fund. I haven't updated it. Weekly chart went to a peak D, I believe. Let me just do this. Identifying the Chapman wave, the lowest low bar. Merely count each successively higher peak alphabetically in sequence. When you get to a D, watch out, other things can happen. In this case, it held very nicely and held the 9 and the 14-period moving averages, spiked up to a peak E, and now that's what we're looking at. I have to put a down arrow E because of the depth of the decline. Trading right now at 54.61, up 71. After yesterday going into the 52.80s. What was the low yesterday? 53.40s. 53.49. Yeah, nice 1 point bounce, a little bit more than a point. Very nice. And what we're looking at here is the weekly chart. Weekly chart still doesn't look that great. Sorry, the monthly chart doesn't look that great. The weekly chart it's under the 9 and the 14-period exponential moving averages. The MACD hasn't crossed negative, but the stochastic way down at 66%. This is going to be very important. 52.94 is the 200-period weekly moving average that I'm looking at as key support. I think it's going to test that at some point. So, yeah, this is a nice bounce. We've seen this kind of bounce before. I think this bounce can go a little higher. It can actually go to the 55, maybe the 50s or 60s. And then I think we start to pull back again. Basil Chapman, Tiger Ignitions Hour. We're looking at the Dow down up to 92, S&P's up 33. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, I'm just doing the notation, chat wave notation in this chart right here. I was asked about C, D, E, F. Okay, this is DYAI. This is Dyadic International Inc. No clue what they do. Doesn't matter. They're in leg F in the weekly chart. I didn't get to do. So in the daily, it's only a peak C, so it could go a little higher. And this is what I said F in the weekly. And I'm just going to do this real quickly. A, B, B, and we've got ourselves a D. Okay, so this is getting a little toppy. Maybe one will pop to the upside, trading at $4.41, unchanged right now, after a spectacular day in the market, where we've got the Dow at this point up 308 and the S&P up 34. This little baby was moving up when everything else was moving down. Now it's a little confused, so it's unchanged right now. Pins, please. I like it. I like it, but I had said last week I thought that 360, but it didn't pull back. So at this point at 441, oh man, I'd have to say that I've missed this. That's all. I just would have to wait for a pullback. Yes, it looks great and all that, but in every other way that I'm looking at it, that monthly chart is suggesting it could pull back, but still go to higher highs. I just don't know what percentage will pull back. I said 360 is an entry point, maybe 380. You could nibble on it at 380, between 395 and 380. That's the way I would do it right now. It's just at 441, having done so much, being in under 150 just a year ago, this is too tough for me. I like it in terms of the monthly and the weekly still being so strong. These beautiful green candles. I don't want to fight green candles. And all I'm going to say is when it pulls back, it can pull back for 2 weeks, 3 weeks even, 4 weeks. And then suddenly it moves up. So I'm just saying this is one, if you've got it, that's fine. Rich in Oregon. Hi, Rich. How are you?
Taking my call.
Hi, my pleasure. How are you doing?
I'm looking at Juniper Networks, and is this just going nowhere?
Well, it's going nowhere fast, because what it does is one moment it's trading in the 28s, and then it gaps down, and suddenly it's in the 25s, and then it has a nice move to the upside, and it gets to the 2750s, and then plop, it comes back down again, and then it goes to a higher high. But now it's almost about to make a lower low. What's your intention with this? Because I would look at this as trading range, and until it changes its character, what I'd be looking at is as it's getting close to the 2550-ish area, or maybe even 2568, this is where it's normally going to start a move up. Very often it actually gaps to the upside, but it starts its move at least towards the 200-period moving average, 2734. The only thing that makes me a little hesitant about this time is that the MACD has already expanded on its way down, and other times it's already started to flatten out. This time it hasn't flattened out, and the stochastic is now flat at 13%. And the other times, it didn't really hang around at the low. It just started to move higher. Almost as it got to its low point, it started to move higher. This time it's kind of stuck and gone to a lower low. So what were you thinking?
Just a short-term trade. That's what I was thinking, that, when it gets into the 25.50 range, you buy it, and then you, like you said, you wait for it to get into the 27 and maybe low 28, and then you got to get out.
So that when a stock pattern sets up and it repeats the pattern, until it doesn't. And sometimes I've shown this so many times, both to subscribers and right here in the den, I've said, hey, check this out. Look how long a sideways move can, I call it the rectangle formation, can last. Walmart, when it was making its highs way back, I wonder if I can find the chart, it refused for 11 years or something, let me see if I can find it, to break above the high that was made. Oh, I used to have this so beautifully notated and everything with, I can't show it now. But if you look back into July of 1983, it didn't break out. It had a high of $1.46, $1.46, and then it was $1.47 in '84, 2 years later, and then another year later it was $1.50, and then finally it broke out, and then it had the same sort of thing, lasting. Where's this? If I can find it here, was it this move? Yeah, and then it landed up back when it made its all-time high in March of 1993. It took all of 5 years, almost 5 years before it broke out. So yeah, stocks tend to do that, and they can do it over and over. So let me go back to our to what we were looking at a moment ago. Juniper, JNPR. And I've got this in the monthly. You see, the monthly is just a sideways range. It's been there forever. And I wouldn't say forever, but it feels like forever since back in July. Back in 2011, it was at this level. It was higher, but then it started this trading band. Okay, here's what I'm going to say to you. Do you use options at all?
No.
You don't? Okay, no problem. So what I'm going to say to you is it might be a tad early at 25.68. It might have to make a slightly, one more little lower low, but maybe below 25.31, which if you're looking at a 2-point or 2.5-point move, that's about a 5% move, that's about a 10% move, or 8 to a 10% move, then that's not a bad risk. I would say at 25.68, it's not great action today, but at least it's moving with the market. So I would start maybe just a small position here, but I wouldn't add to it. I'd give it a couple of days. And if it starts to hold above 25.85, regardless of what the market does. In other words, if the market has a great close today and then tomorrow it gives back a chunk, but then it makes a higher high on Thursday and then gives back a huge chunk on Friday, I want to see this independently. Right now it's moving with the market. So if it can move, and at any point in the next 2 days, if it can get to $25.98, preferably start trading at $26, I think you might have nailed this pattern, because that would be a good sign. But I wouldn't get too carried away. I'd rather wait, and then even if you have to pay up, I'd rather wait for the technicals to be turning, because every other time it's done the move with the technicals acting very well. If it moves now and the technicals, the MACD doesn't improve at all, it's just coming back to retest yesterday's low, or even the low of the 27th of March at 25.18. So I wouldn't get too carried away. But as an experiment, it's something that is, I have this pattern that I call the rectangle pattern, and it goes from the lows to the highs to the lows to the highs. And then what happens when you finally recognize it, that's often where the pattern changes. But this is still seems to be early in the game, because if you look at the pattern, this is only about the third time it's come back to the 25s in about 2 months, maybe the fourth time. So I'm going to say, yeah, give it a try, 25.67. But I just wouldn't get carried away. And also, I would have a stop below yesterday's low of 25.31. So that's a 30-cent stop. 30 cents. That's about 1 to 2%. Yeah, I take that. Hey, can you hold on a second? I got one more thing that I want you to look at. Can you? Okay, I'll be right back.
Yes, I can.
Good, great. Well, I'll be right back. We're looking at Juniper Networks with Rich in Oregon, and it's trading at 25.67. We'll talk about it as soon as I return.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, let's see. Rich, I'm pleased I asked you to hold on. I'm suspecting that there could be a bit of a bounce, but the actual rally, the thrust that's needed in the stochastic and the momentum, I like to look at torque, and then it hands it over. The stochastic hands over the movement to the MACD. I've got a feeling this is going to take a little while. So that's the reason why I mentioned an option, because if we had bought a call option, that would be just a very inexpensive way to see if it's going to go back. But if you don't do that, then all I'm going to say to you is it could move to the upside, but there is a lot of support in the daily, the weekly, the 10-minute, the 120-minute chart, and the 25s. If it takes out 25 support, it's a real problem. So I would suggest, yes, I'm going to recommend if this is the pattern that you're looking for, if you take a very small position and you take a very modest, say 50% stop on the entry point right now, I'm thinking that you will know within 2 days, and I'll look at it again tomorrow. Today's Tuesday, tomorrow or Thursday. We'll see how it's doing. But that's the only way I would do it. I'm not even sure now I can say to you I'd add on strength, because I'd have to see where the strength is coming from. And right now, all it's doing is having a little bit of a bounce from yesterday's ugly candle. To actually, to tell you the truth, if you said to me, would I buy it right now or would I not? I'd say, you know what? I'm prepared to sacrifice a little bit on the upside. I'm going to wait maybe even a day or two to see how it holds any pullback in the market in the next 2 days. But it's a great idea. I would prefer that the MACD was acting a little bit better. I hope that helps you.
Yes.
I haven't given you too much, but I'm just saying a little caution might be better in going along in this particular market right now, especially something that's had a really big pullback. A little bounce maybe, but I'm not sure it's going all the way back to the 27s. Not right now. Hope that helps you.
It does, Basil. Jumping to another subject, could you look at ACB, Aurora?
Oh, ACB. Okay, I'll do this ACB. Oh, we've got a break coming in.
Holdings in your ETF MJ.
Right. So ACB, oops, I won't be able to do it. We just ran out of time. Let me just look at it. I'll talk as we, this is a good start. If you wanted to nibble on ACB, maybe this is a good place to start, but put in a stop underneath yesterday's low. That's the first thing I can say.
Basil.
It's a start. Thank you very much for calling.
Thank you.
Folks, stay tuned. Steve comes up. I'll be back with Tom O'Brien later this afternoon.